Good afternoon, all. Camelback Trading 2724 and the PitFuturesTrading.com coming to you this Friday afternoon, March 20th. We're looking at the market profile of the SPY ETF on the window trader. And I'm not sure if you could hear that ice cream truck playing outside, but I don't think that's the ice cream truck. I think that's the bears pedaling down on bikes, smiling, as a really, really poor finish today for the bulls. We're one time framing down 5 days. We closed below the 2018 lows, just missed taking out this week's low from Wednesday. We go out with both a price spike when we took out F's low in J. I apologize, in J, and a price probe as we make a new low in the last half hour. We closed just off the lows. Incredibly, we had a set of single prints on the upside early that got filled, and we also had a chance for a trend day down. We had two sets of single prints that got filled, but it didn't matter. In the end, bears were just too much and win the day. Volume right now, 315 million, so again, incredibly heavy with the after hours still to come. I had a really good day today, and again, scalping quickly. Small size, except in M. I took a fairly large trade in M for a real quick one, which worked out really nice. The only trade that I didn't make money on, basically scratched, I lost small on, was an A period. When A came down, and the good thing, once again, it was the ETF. I don't have a problem. I don't have a problem when I'm losing money trading the ETF because I'm only buying between 1 and 600 shares, and that's probably the most. So at M's low from yesterday, I bought 100 shares, did it again. I bought 200 shares around a G's low. It went lower. I did not add. Came back up, got out of it, lost pennies on it. So it was a learning trade. I got in too early. I didn't get in too early. The thing is, the trend right off the bat was going against me. So I was looking to buy at M's low from yesterday and value low, but seeing how it was trading, I should have waited. Shouldn't have just went where I was initially going to buy it. The earliest I should have bought it was at the afternoon pullback low. So if I did that, I would have made money on the trade. But again, it was no big deal. But just something for you guys to understand and for myself to understand why I didn't make money on that trade. I took a long in C period. As soon as C took out B's high, got on board, figured we'd go for the opening, figured we'd go for the A's high. We did. It was a nice trade. The one trade I didn't take would have probably been the best trade of the day, and that was in D period. So we one time framed up in C and D to start, but as soon as D came down and took out C's low, we were now below the opening. Value was overlapping a higher all day. Should have gotten on board to see what D was going to give us, and I didn't. And I think the reason was I was kind of long biased since all I did was two longs early. We were one time framing up. I thought maybe we had a chance to go for the inside day to the upside. So it's not a good excuse. It's still a poor move on my part, but I think that's was my thinking when I didn't take it. That would have been a good trade. And then I went long in G. Once G couldn't take out F's low, got back into the initial balance, went long, had a good trade. Did again in H. H came down, bought it, got out of it once we took out G's high. And then once we started probing, once we had this price spike, once J took out K's low, that was it for longs for me. I scalped shorts in K a bunch of times. Each time it went back up. Remember, we had single prints at one point. It would come up, I'd short it, come back down, take it off. I did that in K, did it in L. Then in M period. Again, M period threw a curveball just like yesterday. M took out L's high yesterday, did the same today, very early. And I said, I don't want to short it if that happens. Today was a little different because the market was down a decent amount as opposed to yesterday at that time. So when M came back down and got below where it opened, right, it always comes back generally to where it opened. When it couldn't go back up, as soon as it stayed below where it opened, I got on board a short for decent size and had a very good trade. And then when M broke L's low, did it again for 30 contracts on that one. Went down $1 in a heartbeat. So it turned out to be some very nice trades. So I was very happy on the day. Again, I'm staying in these trades for literally seconds with the options. I mean, first of all, that's all I need out of them. I mean, yes, I could be a hero. I bought 70 contracts on this one when it got below the opening. I held it. I made, I think it was 27 cents I made on that trade. Something like that, or 33 cents. I forgot what it was. I could have almost doubled it if I held it. On the flip side, why am I going to look 30 cents in the face on 70 contracts in this type of market when we could go right back up? I'm not going to do it. I told you the ETF's a different story, but not with these options, not in this volatility, even though the market was going my way, although M had stopped the one-time framing down. Anyway, let's go to destinations now for Monday. For the upside, your first destination will be L's low, because that's where the price probe started, right? We do not know if the price probe's accepted or not until A period on Monday. So 230.02 will be your first destination. Now, downside price probes have historically the last year or so been really, really rejected, but we'll see in this type of market what happens. Then we have F periods low. That's the price spike, right? Anytime you make a new high or low in a day, J, K, or L, if you close below it on the downside, that's a price spike. So 234.30. Then we have the afternoon rally high, which happened in H at 239.79. 244.47, today's high. 247.38, daily high. And 248.37, daily high. For the downside, we have today's low of 228.50. Then we have Wednesday's low, which is now a weekly low of 228.02. 11 wide, 227.43 from February 2nd. Remember, these are all from 2017. 227.16 afternoon pullback low from the same day. 226.82 monthly low. 226.32 weekly low. 226.27 daily low pull low. 225.70 afternoon pullback low from January 23rd. 225.27 weekly low. 224.36 9 wide from January 3rd, and 223.88 monthly low. And those are the remaining destinations to the downside from 2017. So almost over 3 years wiped out so far. Now let's go to the charts. Monthly. We're down. We're one-time framing down 2 months after the outside month down. We have now closed below December of 18's low, 233.76. We're below it by $5. Now, in this market, that's nothing. But it is the first time we closed below it. We probed below it Wednesday, Thursday, and today we did early in the day. Remember, I said it on Twitter and whatnot. It's like a chicken pecking you to death, and finally it just broke through. So, yes, we got below it Wednesday and Thursday, but today's the first day we closed below it. Now, again, one day doesn't make a market, but it's certainly something to keep an eye on, because if we stay below it and we start one-time framing down again next week, my next destination, longer term, is 208.38. Okay? Weekly. One-time framing down, 4 weeks. Again, below, that's 2018 low. I'm not even really looking at weekly lows right now. The monthly lows are the key ones. We're down, one-time framing down. Daily, still the important one. One-time framing down, 5 days. We came out of the inside day to the downside today. Now, it was late, but it still proved to be very, very profitable, right? Yesterday's low was 232.22. So if you took that trade, right, You come out of an inside day, you go with it, and you monitor it for continuation or lack of. Well, if you did that and held it to the lows, it's almost $4 you made. And that's after being down already $5 on the day or so, wherever we were. So very, very impressive. Right now, they're showing me closing at 228.80, so literally 30 cents off the lows today. Now, we are down. We are one-time framing down. We did have an inside day down. The only silver lining, and I mean only, is that we didn't take out Wednesday's low, but we're really close to it. You know, these 3 days, Wednesday, Thursday, Friday, they are all still one-time framing down, but, you know, you can say we're in balance, right? Which would basically be all of Wednesday's range, Wednesday's high and Wednesday's low. I mean, you can say balance rules apply on those 3 days, but I wouldn't hold that much weight to them. I mean, if we don't take out today's low or Wednesday's low on Monday, okay, maybe we trade to the top of the balance. But until, and I've been beating this to death, but until we stop the one-time framing down, this market is still down. And we can't come close to doing that unless we reject the price probe and the price spike from today. If we're able to do that, then maybe the bottom of the 3-day balance holds and we get something going. If we take out these 2 days lows and continue the one-time framing down, we are going to get to that 208.38 level sooner rather than later. I hope you had a good day trading. Rest up. I mean, these are incredibly grueling days and weeks, whether you've been doing it for 35 years, 5 years, or 5 months. It takes its toll on you. So rest up, enjoy the weekend, and we'll speak prior to the opening on Monday.